At 5 o'clock, I went up to my wife and said, we've lost all our money.
Which crypto technology is closest to you, and do you actually understand its philosophy?
And just at our own risk, we simply started investing in this person.
How exactly does your algorithm truly differ from your closest and most significant competitors?
When it was at its lowest, I bought it up, and after that, I did trading invest perpetual on Bybit.
Today, our guest is someone who has been through fire, water, and harsh crypto corrections. From knowing nothing about the market to working at a hedge fund and creating an algorithm that trades for him. Today, he's ready to reveal the secrets of professional trading. Please welcome Vitaly, founder and trader at Sphere Labs. Vitaly, tell us a little about yourself. How did you get into trading, and what has your experience in trading been like overall?
In 2016, I moved to Italy from Moscow. At that time, I was still living in Moscow and somehow found a job. At work, I quickly realized that yes, it's Europe, the conditions seem good, but you can't get far on just a salary. So I started to explore the world of finance. That is, I studied the banking sector, meaning traditional finance. I did it all on my own, from scratch. For about 3 years, I was involved in theory, reading books, studying different segments, and started making my first investments in ETFs. You know, all those classic, traditional types of financial investments. Then, at the very end of 2018, or rather, more precisely at the beginning of 2019, I had the fortunate opportunity to meet someone quite significant. He soon became my trusted teacher and invaluable mentor, and he had, in fact, once worked at a prestigious Swiss bank, a very well-known financial institution. He meticulously taught comprehensive lessons on the intricacies of crypto trading. I personally started out with crypto trading back then, and subsequently, a few significant years down the line, the global pandemic regrettably began. During the challenging period of the pandemic, of course, it gradually became less of just a casual interest and more of a profound, full-fledged immersion into dedicated work. In other words, I started to see it as a job, and by 2022, this person invited me to work at his hedge fund. He had started it, and I worked at that hedge fund. So that's basically how my career as a trader began.
Tell us in more detail, what was it like working at a hedge fund? Because not many traders come into trading specifically from hedge funds. Did the experience you gained there help you later on in your trading career?
Well, would you say that working at a hedge fund is like working in the police? 1 year counts as 3, or what? Because honestly, I thought I already had some kind of foundation, since I was already trading on my own and had some work experience. But in a hedge fund, everything becomes much more structured. In other words, you start to develop a more institutional perspective on trading. So it's not just something you do for yourself anymore. You start looking at it from a more professional point of view and build your strategy in a more professional way. In that sense, a hedge fund is extremely helpful. Of course, there are plenty of other downsides. Since we were working with assets like Ether, our main asset was Ethereum, we worked around the clock 24 hours a day. What was interesting there was that they rented a huge villa for us. It was in the north of Italy, in the city of Goloraci. There was this enormous villa where many families lived, and there were 10 traders among us. And since the crypto market is open 24/7, we would arrive there on Sunday afternoon and basically stay until the next Sunday afternoon. So we lived in that villa for an entire week. Basically, everyone had 3 rooms each. But the challenge was that we worked for 4 hours, then slept for 4 hours, then worked for another 4 hours, then slept again. In other words, you start to lose your mind pretty quickly. So it's really hard to keep up with that kind of pace. This is the Leonardo da Vinci method. On the one hand, it's okay. But the problem is that after 4 hours of work, you can't just quickly switch off and go to sleep. I mean, it's possible. But by the time you finish one thing, then another, and finally go to bed, it's already time to get up again. It's a complicated routine and you have to get used to it. Then you spend a whole week getting used to it at home. And just when you finally get used to it at home, it's time to go back. So that's basically what working at a hedge fund was like. And of course, not everything that glitters is gold. You shouldn't confuse working at a hedge fund with the movie The Wolf of Wall Street, because it's absolutely nothing like that. It's just a job and you have to see it as a job. There was nothing like that there. It was very boring.
Can you identify any specific moments that truly became significant turning points for you? Moments that genuinely transformed you into a professional and successful trader? It seems like at first it was just a game for you, and then it became a real job where you actually made money.
The turning point was when I lost all my money. It happened literally overnight. I don't really remember when it was. I think it was before I started working at the hedge fund. I think it was in 2022. I was working at night. I remember at 5 in the morning, I went to my wife and told her my second son had just been born at that time. He was only a few weeks old. I said, we've lost all our money. It was really tough. It was so tough, I didn't even know what to do next. So it was a truly, really incredibly difficult and challenging situation that you just absolutely have to go through. Honestly, I would highly recommend every single aspiring trader to go through this kind of invaluable and essential experience. It's an extremely tough experience. But after that, you basically start building from the ruins. I remember at that point, I only had $2,000 left. I had lost 30 something thousand at that time, and I was left with only $2,000. I started over, working little by little. But my trading concept isn't about doubling your capital in a month. I make at most 10% a month. And of course, with $2,000, don't think I was living off that money. Accordingly, other factors started to come into play here. That is, we had our own educational program and academy. So money started coming in from everywhere, little by little, and things began to take shape. But the hardest and probably the most important thing here was that I needed to regain trust in myself. And these $2,000, after that, I worked for about 8 months with only this money. For what purpose? Because people can often get really quite demoralized during the work itself. So during those challenging 8 months, little by little, you slowly start to fully realize that, yes, I can actually effectively work, but I made a significant mistake. Now the main task was set. At that time, I also promised myself that I would never be liquidated again. And accordingly, from that moment on, thank God, everything was fine.
Why do you think that the profession of a trader is one of the toughest professions? And in general, would you be able to recommend trading to your children?
It's tough because you have to fight your own demons. Trading is not about working with others, it's about working with yourself. That is, you have to find this balance in everything you do. And here, the only enemy is yourself. In other words, the market is not your enemy. You can make things worse for yourself, or you can make things better for yourself. And that's why probably the hardest work is working on yourself. Accordingly, that's why I believe this is a difficult profession. Listen, you asked a question about kids, and I don't know. I don't know.
Maybe that's something for you to think about in the future.
It's a tough question because on the one hand, yes, of course you want to, but on the other hand, it's like it's cool when someone can explain and show you these things. If you go through all this yourself through this swamp and eventually dig your way out, it's impossible to learn professional trading in just a year. You can theoretically understand it, but in reality, it will take some time, a long time, in fact. And there's no guarantee that this time will be enjoyable because we know the statistics. How many people actually survive 5 years in trading? It seems to me that literally only up to 10% of those who start make it to their 5th year.
Is there a list of the top mistakes traders make when they lose their deposit?
I genuinely think that the primary and most significant mistake that many people, especially those who are just starting out, frequently make is constantly comparing themselves to others. That is to say, when you begin to compare yourself to some popular Reels creator or a well-known YouTuber, let's be absolutely clear right away. A staggering 99% of what you typically see in Reels, on TikTok, or even on YouTube is simply not true or entirely accurate. People don't show their real statistics. They only show certain parts of their statistics and so on. And a person watches, like a beginner comes in and starts watching different bloggers looking for some information for themselves. But along with the main information, they get this wave of misleading information, like you can turn $100 into 10,000. And as a result, the person starts to think that this is normal. But it's not normal because here you need to work only with yourself and set realistic goals for yourself. To understand what a real goal is, it's enough to look at global statistics. It's very simple. Just open any copy trading platform offered by different brokers and find those traders who have at least a year of track record in the market. A real year, not 3 months, not 2 months. Specifically, a real 1-year track record. And look at how much they earn on average per month, and you'll see what's actually realistic. But all those others you see, that's not realistic. And this is one of the biggest problems for beginner traders, because then greed starts to kick in. Because what does all this eventually lead to? To greed. Because people want to make money. And where there is significant greed, there is often also profound fear. Indeed, fear and greed are truly two interconnected sides of the very same coin, because you can easily start getting thrown from one emotional extreme to the other.
Is there maybe some universal advice for people who are just starting to explore the world of trading? Like 1, 2, 3?
Detach yourself from everything external. In other words, don't look at anyone else. That would probably be really great because the moment I stopped following others, you start, well, if you already have some kind of technical foundation, yes, before you start working, you begin, of course, you'll make mistakes. That's normal. Your task is to make sure your mistakes, that is, these mistakes, don't repeat. Making mistakes is inevitable. You'll keep making them all the time, and each time there'll be new ones. Even professional traders make mistakes. But the main thing is that they don't repeat. So if you make a mistake once, that's normal, that's how it should be, that's good, that's experience. If you do it twice, that's carelessness. If it's 3 times, that's a pattern. So if you've fallen into a pattern, then you need to get out of that pattern. And the answer is 1, 2, 3, work on your own. Don't look at anyone else. And the problems that arise for you, you need to find solutions for them. And of course, set yourself a realistic goal. That is, don't think that 20% profit per month is cool. No, that's not cool. It's better to earn 5, but to make 5% every month over a long period of time. Because that's when you get that aha moment, the understanding that you know how to do it, meaning you feel morally prepared for it. You feel that you can do it and you succeed. And when you succeed, trading stops being something difficult for you and instead becomes just a job. So when you succeed, you start to see it as a job. You go to work every day. That's it. That's the way you should look at it. Your goal is to make 5% a month, 7, 8.
Let's talk a little bit more about the fascinating world of algorithmic trading. What is a Mathbot? How does it work? And why was it created?
Mathbot comes from the words mathematical bot, so Mathbot. Why Mathbot? Because it's based 100% on mathematics and statistics. Look, when I personally worked at a prominent hedge fund by the very end of my tenure there, I genuinely couldn't quite fully comprehend why such significantly big and influential players, well, at that particular time, they certainly seemed incredibly big, serious, and highly established to me, couldn't possibly find a more straightforward or simplified way to approach and execute their complex trading strategies, right? So there's a strategy. That is, we have a strategy in our heads. We work according to a certain strategy, of course. Is it possible to create some kind of algorithm and then build a bot based on it that will open positions for you? So I was already asking myself this question back then. I didn't find a solution at the time, but that's when I met a mathematician. He was an older man, old enough to be my father, probably. He was gray-haired, mature. And somehow I started talking to him. He said he had indeed found some kind of remarkable algorithm, a sophisticated mathematical algorithm that works exceptionally well with gold. And this particular phenomenon has been consistently repeating itself for several decades now. I was very skeptical about it. I said, well, okay, yes, a truly doubtful okay when you encounter a supposedly brilliant and highly skilled mathematician/trader who, despite their immense talent, lives in such abject poverty, right? It's the classic, indeed, the quintessential scenario, isn't it? This situation often raises many questions and concerns about their circumstances. If you're so smart, why are you so poor? Ah, there you go. Back then, I even told my partners, guys, there's an interesting topic here, but the guy is quite weird, really quite weird, and we need to get to know him better somehow, perhaps through further interaction. Because he said, I'm not going to tell anyone my algorithm. It's something super cool, really amazing. It's all mine. I won't give it to anyone. If I tell you, you'll rip me off. So anyway, at that time, he was from Moldova. So I took a plane, flew to Moldova, met him in person, and just at my own risk, we started investing in this person. At that time, he needed help. We helped him a bit with the situation he was in. And at the same time, he worked with us and continued working for quite a long time. And little by little, he started to share a certain mathematical formula. Of course, this formula was very raw, and for over a year, together with the developers, we tested it, back-tested it, worked on it, applied it, added things, took things away. So there was a huge amount of work involved. And in the end, we came up with a certain algorithm, which we called Mathbot. Later on, by the way, we even patented it. So it is currently patented, and we are working with it now. Our goal is to reach out to serious players like hedge funds or some pension funds. We did approach them, but they told us that we're still very young and to come back in 5 years. So basically, you need to work for a while. Well, that's not the point. We've already been working with this Mathbot on real accounts for about a year and a half. On our website, there's a link where you can see our trading accounts in real time. We have, I don't remember exactly, 6 or 7 active accounts that we've set up and connected to the Mathbot. And the beauty of the Mathbot is that starting from 2006, when we were backtesting it, when we got data from the broker, the goal was to find an algorithm that doesn't lose money. Most algorithms are either trend following or grid-based. But in our case, we took a mathematical approach. In other words, it doesn't matter to us which direction the market is moving. We need to be making money consistently, just like a trader. So we shouldn't be relying on trends. And when we created the robot, we said, okay, it worked for 2 years. For example, 2024 and 2023, right? But in 2022, it lost money. So we go and look for the mistake. We found the mistake, then we go and look at 2020, from 2020 up to today. Wow, it passed. Awesome. I remember my joy. The joy when this algorithm worked for 10 years of continuous history with compound interest. That was really cool for me. In the end, we used the maximum possible period that the broker allowed us. We tested it on FP markets and IC markets. These are Australian brokers with some of the largest historical data available at the moment. And Mathbot, in a nutshell, is an algorithm that hasn't lost capital even once in the past 20 years and is fully automated, meaning we can set it up and walk away from the computer for 2 or 3 years. The only issue could be with the broker who might play a dirty trick on us, like going bankrupt and so on. But the algorithm itself is simply indestructible, and accordingly, we have patented it.
I know that many companies are now using artificial intelligence or AI for their algorithms. How does your algorithm differ from your closest competitors?
In simple terms, show me an algorithm that can deliver results for 20 years, even in backtests. But it's very important that these tests are tick by tick. That is, we specifically download data from the broker and verify it. The same charts as before. So our goal was to obtain 20 years of continuous history with compound interest. That is the main objective. Today, there are numerous other bots available on the market. I've personally probably purchased, I don't know, dozens of different bots to thoroughly test and evaluate that consistently showed much better and more impressive results than our own bot. I was curious, why is that? I mean, I've been going crazy over this for years, and then some guy comes along, sells a bot for $200 and gets better results. So we bought this algorithm and decompiled it. Basically, we just hacked it, looked at their code that they had created. And this world is very cunning, very dangerous. Why? Because the guys who create the algorithm then sell it for $200 or $300 on the mass market. First of all, there are two things. When someone puts it on the real market, I don't know a single algorithm that has lasted a full year. Take our algorithm, for example, we specifically set up our different accounts, some with 2,000, 5,000, 10,000, 30,000, so that people could see how it works in real time. They don't last a year, even though in backtests, there's 20 years of history. What did we do? We hacked and checked and saw that developers deliberately put into the code specific days when the bot shouldn't work, you see? For example, in 2022, it lost money, say, on February 12th, and then they add to the code, on February 12th, don't open any positions during backtesting. These are the kinds of things that, well, it's hard for someone who isn't in the know to understand or be aware of. And in reality, it's impossible to find out. But unfortunately, that's how it is. So the only parameter you should use to choose a bot or evaluate it is, of course, testing on a real account. If it's been running for at least a year or even at least half a year, that's already a good sign. If it's been a year, that's even better. If there's also a historical backtest, that's even better. So all of this together, this is what actually sets it apart from others.
And how do you monetize? What is your source of income?
How does our monetization work? The first format, we provide a free strategy that works on the market. For example, we've launched a course. It's available on YouTube for free, and we give you a real working strategy. In other words, it delivers results. Anyone who does this manually, by all means, can earn money. And we say, we have a bot that can do this for you. If someone is a complete beginner, knows nothing about trading, and connects the bot, of course, there will be factors. Something might happen and, well, it might not work out. So here you at least need to have some understanding of trends, some basic foundation, and we sell licenses for these bots. But the bot is our flagship. And if other bots require some human involvement with our bot, you just connect it, and the person doesn't touch the account at all. We don't touch it, we just observe. So our job is to guarantee the operability of the algorithm. No one anywhere will guarantee you the result. That's nonsense. Our job is to make sure the bot doesn't fail, doesn't malfunction. So every day we log into the client's VPS, meaning we check the account, make sure it's set up, everything's fine. We don't touch anything, we don't do anything. And accordingly, we earn from the license and from a percentage of the profit, to put it simply.
Guys, Vitaly's team runs a YouTube channel and also a blog on Telegram. I'll leave the links in the description. Subscribe, get interested, ask questions if you want to understand algorithmic trading. What would you advise those who are afraid of losing money in trading, but still want to get into this field?
You should always compare the activity of trading to a professional job. This profound statement was eloquently said by our esteemed comrade Gerchik. My mentor also used to say this back in the day. It's actually quite a common opinion. So when you start trading, you're basically going to work. For example, it doesn't matter. Trading is one job. If you work as a taxi driver, that's another job. So whether you're working as a taxi driver or, I don't know, on a construction site, you need consumables, you spend money. And if your car breaks down, that's an expense too. These are the unexpected expenses that can come up at any time. Something might happen, like you get sick and can't go to work. That's also a financial loss. You also need money just to get to work if you work in an office, right? So even basic things like that are expenses too. In trading, when you lose money, that's part of the expenses you just need to be aware of in advance. So we know that, for example, once a year, there might be some kind of loss. So that's normal. You just need to look at it as it is. To put it even more simply, losing money in trading during your first year or two is completely normal. After all, you're learning. So until you learn, you can just relax. Just don't work with a large amount of capital. When you see that you have 6 months of stable returns, meaning in percentage terms, since you'll be working with a small amount of capital at first, or even just on a demo account, only then should you start adding larger amounts of money. So until you have that experience, don't risk your money because the odds are against you. Chances are you're not smarter than the market.
So, what are your plans for developing this bot? Are you planning to build a long track record so you can eventually sell it, like as a startup or an idea for funds?
I really like Warren Buffett's approach. His approach is that he works quietly and consistently, but he has an enormous track record. I've noticed that in the market, the truly successful traders are the ones who make small profits, but do so consistently. And that's the level I'm striving to reach. So in this regard, the bot is really helping me a lot. Right now, we have investors from Dubai who are investing in our company where we integrate the bot. But our ultimate goal is to reach the big players. Of course, the bot does have its own drawback, which we're working on. This process is going to take quite a long time. It's the drawdown, in other words, temporary losses. So we have a team of traders and developers, and when an idea comes to us, all right, let's test it out, see how it works, and add this feature to the algorithm. So if it works out, okay, for example, we managed to reduce the drawdown. For instance, over 20 years of continuous history, 19, well, by the end of 25, it will be 20 years, our maximum drawdown was 42%. That is a drop in the account balance. But this drawdown is temporary because the bot always recovers it within 1 or 2 weeks. And when we talked to this one German fund, they said, wow, that's cool. But first of all, you're young, so at least we want to see 5 years, meaning payment slips, invoices, proof that you're actually making money from this. That was a year ago. So we said, okay, we understood your reasoning. That's what the big players want. And secondly, lower this dropdown, find a way to reduce it. So now all our efforts are focused on figuring out how we can integrate something. That's why we're even looking for top traders, people who are ready or want to create, have their own ideas, their own strategies, and want to make their own algorithm or their own bot. We can make this bot for them for free. It's not hard for us. Why? Because we're searching for ideas right now. How to lower it? Because it can come just like that from a stranger, or I remember we reduced it from 50% to 40% just by changing one very simple parameter. That was by accident. So specifically, we want to reach out to various large pension funds, to significant hedge funds, and other institutional financial entities, and offer them this algorithm. Right now, we're partnering with anyone who's interested. Whoever wants to, we give them the bot to test. Take it, test it for a month, 2, 3, however long you need. Then people either become our clients or later tell others about our bot.
You also trade cryptocurrency. Which crypto technology is closest to you, and do you understand its philosophy? Maybe you can name a specific project or blockchain.
Listen, I really like Ethereum. Ethereum and Bitcoin. All of us, I have participated in creating several crypto projects. Some of them turned out to be scams. Well, the company just didn't even have any money. I was on the team as a tech specialist in creating this whole thing. And there are a lot of crypto projects where, honestly, you can create a crypto project for just $30,000. And you can even sell it with marketing, in my opinion. So you sell it, quickly raise money. But the thing is, a lot of crypto projects are just empty shells, meaning companies that don't really amount to anything. In fact, it's a huge number. 95% of them are just junk on the market. They copy other companies, just copy from others. For example, there are a lot of good projects similar to Ethereum, some even much better in certain aspects, but Ethereum still remains at the top. That is, Ethereum is now addressing its most important issues like gas fees and some other things. Nothing can truly be better than Ethereum on the market right now. Well, Bitcoin, of course, because that's a whole different story. I remember when I worked with Ethereum at the hedge fund, and I sometimes trade Ethereum myself. Well, what do I mean by trading? When it was at its lows, I bought it up, and after that, I did trading with Invest Perpetuals on Bit. So my goal was to accumulate Ethereum for the long term, and I did this periodically. So when I see we're at the bottom, I buy.
And what is your main principle in life and in trading that guides you?
Slow and steady wins the race. That's as far as trading is concerned. I've argued with my partners more than once. I always tell them, guys, we have a really great product and we need to get noticed by some pension funds, maybe hedge funds to whom we can sell this product. If you're a solo trader, meaning you work for yourself, then in the future you'll be selling yourself. In other words, you are the product. In trading, two aspects are important: longevity, how long you've been in the market, and your profitability. But in other words, if you're actively in the market, there's also a critically important third factor that successful hedge funds pay a lot of careful attention to, namely consistency. So if you diligently work a little bit every single day, making steady progress bit by bit, much like industrious ants, but you do it consistently over a significantly long period, believe me, you'll be in extremely high demand. So any hedge fund, if they find a competent trader who has their own track record, maybe on their phone or somewhere else, for a year, you'll easily get a job anywhere. And if you have, that is, you don't need to chase after profits. Profit will come on its own. Profit is simply a consequence of your actions.
That's excellent advice, which I think I'll pass on to my son. Right now, he's searching for himself and launching startups. Maybe he'll take a look at the trading niche if it interests him. Anyway, thanks for coming and explaining trading. We'd be happy to have you back again.
Thank you all, and thank you very much, Alexander, for the invitation.